stocks seesawed on Friday and then ended the day and week lower as investors analyzed the release of the monthly jobs report. The government data showed employers added 209,000 jobs in June. Not great, but enough to signal the economy is proving resilient and also reinforcing the bet that the Fed will raise rates at its July meeting. And with that, Americans appear to be reluctantly accepting the new norm of high interest rates and pricey housing as indicated by a Fannie Mae survey. The survey measures a half dozen components, none of which we know, but the survey showed that 4 of the 6 components remained stagnant. This appears to indicate that confidence in the housing market may have plateaued and suggests many consumers may be coming to terms with elevated mortgage rates and high home prices. But realize the survey was completed before the next expected rise in interest rates when the Fed meets soon. And as a citizen of this country, you must know that the Federal Reserve was actually created in order to save the big New York banks from their greed-driven mistakes. Oh, and I almost forgot. The Fed is also supposed to keep inflation low, and you do that by increasing unemployment because people working and earning money by providing goods and services that are in demand is inflationary. And so with my complaints about the government, I headed off to Washington, D.C. this week. I stopped by the White House for a short chat. While I waited in the lobby, I pulled out my little baggie. But with all of the distractions going on, I must have forgotten my little package when I departed. But rather than give you the blow-by-blow of my meetings with members of the First Family, I'd rather just focus on the charts. And to mix things up a bit, we're looking at the 3-year weekly chart on the Fidelity NASDAQ Composite Index ETF. And the symbol in the upper left, as you can see, is ONEQ. And this serves as a pretty good proxy for the NASDAQ. Over here, we have the channel lines all set up. You can see bottom channel line here, and then the top channel line moving up through here. We can continue to trundle up the top channel line here in the future because I think there's enough power and momentum in the market right now to continue. The other possibility is to break up and through. I don't think we have enough power to do that, or we roll over and head down to the bottom channel line. I think the greatest probability is that we just continue to trundle up. Let's take a look at the oscillators. Moving down, volume looks fine. Here is the MACD. You can see that we've had a pretty good move. Say it started at this point here, moving on up many months with some acceleration a week or two ago. Here in the fast line and the slow line, we're well above zero, so there's lots of strength here. And even if there's a bit of a contraction, I still think we have plenty of strength to continue moving up in the chart, the price chart itself. Here you can see in the histogram that we're having a bit of a contraction, at least in the MAC, but I don't think it's serious. Doesn't look to be too sharp, so it's not concerning me too much. But moving down here into the price rate of change, you can see that we're not quite up to that 10 level. We were back here, so that is the highest point on this 3-year chart. I would be looking for us to perhaps come down here and then turn and head back up again as we did here, as we did here. So I think a little bit of consolidation here within the next week or two, and then perhaps another attempt at a move up higher. Into the next oscillator, which is the RSI, we did pop above that 80 level into that overbought territory, but we contracted back down here. Once again, I think we're going to gain some steam and head back up, hopefully into that overbought territory, showing more strength. But remember, we have the Fed meeting here soon enough. And then down into the stochastics, you can see that we've been in that overbought territory for a number of months now. Even though this looks like it's starting to slide on the downside, the fact that we have so much strength and we're up here in this elevated area, I think that once again the probability is for the market to trundle up that top channel line. Doesn't mean there's not going to be volatility. We'll have some contractions, volatility as we continue to head up. I think that's the greatest probability. Into the Williams, pretty much the same thing as the stochastics. We're pretty strong. We had a nice move all the way from, say, back September, October, all the way up here. So there's plenty of strength in the market. I think we continue on the path that we have been. I don't think there's enough strength to break up and out, but I don't think that there's any weakness that's going to say we break down. At some point we will break down, and then we'll come back and perhaps test that bottom channel line, but that is weeks ahead. And so for today, that's ChewDog Charts. Thank you.